China purchased for 14 straight months. And, I have a feeling that there will come a time when a country like China, who, if you listen to Alistair McLeod, will tell you 40,000 metric tons. Some other people are a little bit less than that. Certainly not the 20 some hundred tons that they tell us, but 8, 10, 12, 15, 20 times what they say that we have. If you look at the amount of production and the amount of importing and what they already had, it's pretty easy to say that they have way more than we do as a country, way more than the 8,100 metric tons we're supposed to have that hasn't been audited. But I have a feeling there will come a time before the music stops where they revalue gold. And they will do the same thing that Roosevelt did. And they will revalue gold, and they will end up having a very strong currency backed by gold, just like the finance minister from the Dutch financial minister said we should do too.
In a recent discussion, Andy Schectman highlighted key economic indicators pointing towards a significant global shift. Despite official claims of declining inflation, critical sectors such as car insurance, up 20.6%, transportation, up 9.5%, and food, up 5.1%, have seen persistent price hikes over the past year. Schectman underscores a growing trend of de-dollarization, with countries like China quietly accumulating gold and silver, positioning themselves for a potential revaluation. This move, coupled with record withdrawals from exchanges and central bank acquisitions, suggests a looming reshaping of the global financial landscape. Stay informed on these critical developments by liking, sharing, and subscribing to our channel, and don't forget to turn on post notifications for the latest updates.
When I listened to what Putin said to Tucker Carlson, I'm like, well, geez, that's what I've been saying for the last 3 years. And I got about 100 emails saying that. And you don't have to be an economist or a president of a nation or particularly astute to see the crumbs that have been laid at our feet. You just have to be able to try and form them together. And, I think it's one of these deals where I look at all the daily news and I try and intertwine it into a message to give it a little bit of a fresh spin. But the reason I stay focused on something that has become a little bit more narrow in scope is because I think it's the only thing that truly matters. And while there are a lot of people out there like Peter Schiff who will do the micro day to day, the numbers of employment and the CPI and GDP and PPP, all of this stuff, that's important. I have a hard time focusing on the minutia. I just look at the big picture. And when you see 35 other countries formally apply to the BRICS and 20 plus informally apply, when you see trade being done on the M bridge, usurping the SWIFT system, when you see trade being done in other currencies that used to be done in dollars, when you see repricing of metal $100 an ounce higher and gold and $2 an ounce higher and silver on the Shanghai Exchange than in London, or all of these things in and of themselves are important news stories. Put them together into a bigger context and they become very concerning. And that's really, I guess, what I have been trying to do. And so, yeah, I think that we're getting to that point where things are going to become very, very evident to people. Well, let's look at today as an example. Yeah. So, you have inflation come down, but it's still higher than expected. And the markets get smacked, right? And it's interesting. You look at a chart and they come straight down. That's not how markets work. In this case, it is in the price of metals. But look, it's a lie. We've had prices that have been rising at an annualized rate of 3% or more now for 34 straight months. And even as inflation has come down by the CPI, prices are still rising. And when we talk about a 3.1% inflation on the CPI, here are the numbers right now over the last year. You have car insurance inflation up 20.6%. Transportation inflation up 9.5%. Hospital services 6.7%. Car repair 6.5%. Homeowners inflation 6.2%. Rent 6.1%. Food away from home 5.1%. Think McDonald's. Have any of you gone through a McDonald's drive-through lately and order a Big Mac value meal and it's $14, $15? When I went to high school in Minnesota, My high school, St. Louis Park High School, was across the street from the first McDonald's in Minnesota. And we had an open campus. And I remember in 10th grade or 9th or 10th grade, which would have been in, the early 80s, with $2, you could go in there and get, 3 hamburgers and a small fry and a small Coke for $2.50. When you talk about how insidious inflation is, regardless of the fact that we're being lied to by the CPI numbers, people just don't get it until they start to reflect upon it from years past. It's so slow that you really don't get it. But as we're being told, inflation is coming down, everything's great. We're not going to raise, we're not going to raise rates yet, though, because it's still a little stickier. Look, at 3.1%, they're still over 50% away from their target. But you look at all of these things, and it's interesting, a few of them like rent and homeowners and food. These are the things that are conveniently not in the inflation numbers. But the point of it is that they're telling us that inflation is coming down from much higher levels, yet the things that we need, car insurance, transportation, hospital, car repair, homeowner, rent, food, all of the things that we need, not that we want so much, but that we need, are not coming down. In fact, they're going higher. And I think it's important that when you look at gold, and most people that don't understand what the heck gold is view it as an inflation hedge. That's what we've always been told. So I think it's kind of funny that as the prices get smashed in the derivative gold market when the CPI market comes back a little hotter than expected. It's supposed to be the other way around. So when you talk about manipulation, when you talk about the markets being controlled, it's very upsetting. And I think to a lot of people, this is what dissuades so many people from accepting precious metals as a hedge, because here you have numbers come in hotter than expected and bam, they smack the heck out of it. Well, that's, if you've been around this market long enough, something to be expected, especially pushing gold down below a psychological level of 2000. But this doesn't change anything, and nor does the fact that we keep seeing record withdrawals off of the exchanges and deliveries off the exchanges and central bank acquisitions. So yeah, it's frustrating, but I think ultimately these are the reasons why you're seeing countries like China purchase for 14 straight months. And, I have a feeling that there will come a time when a country like China, who, if you listen to Alistair McLeod, will tell you 40,000 metric tons. Some other people are a little bit less than that. Certainly not the 20-some hundred tons that they tell us, but 8, 10, 12, 15, 20 times what they say that we have. If you look at the amount of production and the amount of importing and what they already had, it's pretty easy to say that they have way more than we do as a country, way more than the 8,100 metric tons we're supposed to have that hasn't been audited. But I have a feeling there will come a time before the music stops where they revalue gold. And they will do the same thing that Roosevelt did. And they will revalue gold, and they will end up having a very strong currency backed by gold, just like the finance minister from the Dutch financial minister said we should do too. We should revalue our gold. And isn't it ironic that if you look at the balance sheets of all the central banks, gold is held in an account called the gold revaluation account. That's the name of it on their balance sheet. So if they want to get their assets in line with their balance sheet liabilities, if they want to reliquify their economy, one that is having problems with the real estate market and with the stock market in China, if they really do hold as much gold as our buddy Alistair says, who I have nothing but the utmost respect for, revalue gold and watch what happens. And look what they're slowly doing right now, turning up the heat on arbitrage. Silver's $1.50 higher. Gold is 70, 80 bucks higher right now in Shanghai. Siphon slowly. Don't let them know what you're doing. The frog in boiling water. But just like inflation, when I was a kid in high school, price of a hamburger then to the price of a hamburger now, slowly turn it up and let the arbitrage, those sophisticated traders that can access the COMEX, the LBMA, and the Shanghai Exchange, sell all of our gold and silver in the West to the Chinese, and bang, they'll revalue it. And they'll revalue it to a level that will immediately change the narrative. And, of course, with the BRICS meeting coming in October, don't be surprised to see this kind of talk start to heat up. Now, is it going to happen in October? I don't know. The mistake a lot of people make is saying it's going to happen in October. And that's what James Rickards did. And I was fortunate enough to have, a couple drinks with him in July before the meeting happened in August. And, what he said is going to happen. The Shanghai Cooperation Organization, the Eurasian Economic Union will join the BRICS, and they will issue a commodity-backed currency. But to say when is a mistake. But I do believe that these things indeed logically will happen. It's a logical progression. And when you see all of these BRICS countries, look at, a country like Turkey, who has now just formally applied to BRICS, has massively accumulated silver recently, massively. So you have countries that are leaving the Western system. They were just told that you're not going to join the European Union anytime soon. And so they formally applied to BRICS. Well, they're buying gold, they're buying silver, they're doing, a year ago, before they had to sell some of their gold to finance to help get inflation under control, they were buying more gold than anyone in the world too. So these nations, I think, see the big picture, and the people in this country who are being lied to by the Bureau of Labor Statistics, who are not letting us see what's really happening, are falling right into the hand of these countries that are de-dollarizing. So put these things together, look at each one of these pieces and see how they fit into a growing puzzle, and you'll see a picture that starts to take shape very rapidly. And I think it's going to take shape faster and faster and faster as we get closer to the final October big meeting in Russia.
Thanks for tuning into today's discussion. We've unpacked critical insights into the global economic landscape, highlighting the persistence of inflationary pressures and the shifting dynamics of monetary policy. As we navigate these complexities, it's essential to stay informed and engaged. Remember to subscribe to our channel for more in-depth analyses, like this video if you found it insightful, and share your thoughts in the comments below. Your feedback fuels our discussions. Until next time, stay curious and keep exploring the world of finance with us. Thanks for watching.